Joining us with their thoughts, Jack Mohr, Director of Research for Jim Cramer's Charitable Trust at the Street, and Mr. Wonderful, Kevin O'Leary from O'Leary Funds.
Do you think the deal's going to happen?
I don't think it will. I mean, you have to realize the size, the pure size alone in this and complexity is very prohibitive. And I know that Microsoft has $85 billion in cash, but this would require a $65 billion investment. And Microsoft appeals to the value investors, and this would not be a value-enhancing transaction.
Jack, let me ask you, buddy, have the analysts, the bottom-up analysts, downgraded earnings too much in the first half, and will they start to upgrade earnings in the second half, which I think would be very bullish for stocks?
Well, yeah, I mean, I think there's been a lot of volatility in their earnings forecast, and I think a lot of analysts got burned by having too high expectations heading into 4Q, took it down for 1Q. I think they're taking it down in a lot of respects for 2Q as well. I think a lot of earnings expectations have to come up.
Jack, you're the head of Cramer's Charitable Trust. Should we assume that you two agree on all of these thoughts, or are there times when you guys kind of don't see eye to eye?
We try to stay on the same page. I mean, I think that it's a good balance because we'll go kind of back and forth sometimes, but I think we always want to come to the same agreement.
Jack Mohr, the chief investment strategist for The Street, which is a financial news service website, is here with us to break it all down.
And we last talked about Yahoo, I think, last time I was on. I think Twitter could become a Yahoo if it doesn't agree to be taken over.
Jack Mohr, research director of Action Alerts at TheStreet.com, and David Nelson, Bell Point Asset Management chief strategist. A lot of people look at Walmart because it's the largest retailer as being something of a proxy for the U.S. economy. I don't think so. I think when I look at Walmart, I compare it to Amazon. One stock is up huge, one isn't. It feels like they just can't keep up with the times.
Yeah, and it's very idiosyncratic for them, and they're certainly not able to catch on to any kind of, secular wave right now. That's not really working for them. The biggest issue with them, this is what everyone's freaking out about today, is that they told investors today that their investment cycle is just starting. They need in order to remain competitive, in order to go against Amazon, in order to go against Target, they're having people attack them in every single corner. They're going to have to spend a lot. Now, investment cycles in retail it's not like 1, 2, 3-quarter thing. It's 3, 4, 5 years.
If you're saying it's going to 1,000, it's a $200 discount. Jack, where do you think it's headed? Lower, I presume.
First, I'm going to give Robert credit. I think last time we brawled, it was at 700, and he was right.
Quick last word, Jack.
Yeah, I mean, they're not laying waste to Costco that has lower prices. They're not laying waste to TJ Maxx. Google's offering a cheaper offering on the cloud level, and I mean, to say 1,000 is
The first thing I'll say, great quarter, but it had come down a lot. As much as it pains me to say this, because I love Shake Shack. I've had, I think, 3 or 4 burgers in the past week, no joke. It's so overvalued.
And it is something to wonder when you see such a big decline in the share price, though. This stock has a pretty hefty valuation.
Yeah, and it has for a long time. I remember a year ago to the day, actually, the morning after, going on Squawk Box and saying, I think shares were popping after the quarter. It was trading at $75 a share, and it was absurdly overvalued then, and I think it's overvalued now. I think that there's really the only way I think that you can justify owning shares is for the comparable sales momentum, for sales to actually not only exceed estimates, but crush them.